The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach?
The following takes place between 2 p.m. and 3 p.m.
And what do we have? Well, we've got the NASDAQ up 17, the Dow up 168, and the S&P up 6.5 points. And what is the story of the day? It is kind of a bit of sector rotation. A lot of people just not believing, and that's their right. But I suspect that they are a little ahead of themselves in the not believing category. And as I said last week, enough with the negative waves. I think we've got a lot of good things happening. So we shall see. But it is one of these days where it's going to be kind of an interesting day. Going to be a lot of people selling out of things, trying to get out of them as quick as they can. And my guess is the very short term is going to be very problematic in compared to the very long term. But we'll see in the next few days. So we got the dollar out moving, as some people said in the den out here. Got a little bit of a backtrack from the Donald Trump, but I think we're going to see significant lower dollar prices, at least in this area for a while. But of course, everybody's going to want to jump from one side of the boat to the next. I suspect sitting on the trend is the way to do it. And as long as, what do we have for gold out here? 1359.40 is what I show. I think you're okay. Silver's up 6 cents. A lot of people just bouncing around trying to get money anywhere they can find it. I think it's kind of very short-sighted to be trading these markets on the 5 minutes. I think there's a lot more money looking at the dailies and more interestingly, the weeklies. But everybody's trying to eke out a little bit of cash in this market. I think that you're, will you make the money today? No. But again, I don't work for an hourly wage. So we'll look more at about it later. But what do we have? That's about it. Volume is good. But my call is it's nothing but sector rotation ahead of fund buying on Monday. On Tuesday, the shift to the industrials for the big plan for infrastructure, and then a handful of days into the 8th of February, where we're going to once again face the issue of a government shutdown. This time, it's either going to be over before it starts, or it's going to be very extended. And right now, it looks to me like a lot of people want to extend it. We'll see how that goes over the next couple of weeks. But kind of hard to think about anything. I know a lot of people are thinking that the SMHs are headed lower. And we're off 80 cents, 107.86 the high, 105.51 now. But there's just not that much, I think, to be had. My guess is that come Monday, we're going to see funds come back in these SMHs, and they may not go to the previous highs. But my guess is we're still, or my speculation is we're still a week or two away from finding some kind of meaningful high in this market without some kind of giant signal. Meteor could hit or something like that. But as far as anything in the charts, I continue to see very little other than a very tired market at the high. And we'll continue on. So what else do we have happening here today? Well, that's kind of a lot of it. Do we have anything else? Got a lot of earnings to go through in the charts today. I will try to. I'll try to just get that done somewhere else then. Well, let's get on to our history.
Then it's all just a little bit of history repeating.
It is nothing but history repeating. And on this day in 1905, 1905, the premier mine in Pretoria, South Africa, pulls out a 3,106 carat diamond. It discovered during a routine inspection by the mine's superintendent, weighing 1.33 pounds, and christened the cullinan. It was the largest diamond to this day ever found. In 1938, De Beers started an ad campaign. It started off and said that you should be giving rings with diamonds in it. To that point, the only people buying diamond rings were the genteel set around big cities who had girlfriends, and they wanted to sleep with them. If they got pregnant, they were always worried that they would end up in the poor farm. So the thing of the day was to buy diamond rings with the big diamonds on them, making the women think that at least they could sell the diamond ring one day and have enough money to raise a child out of wedlock. In 1938, De Beers pushed an ad saying that you should give 1 month's salary for buying not just a ring, but a ring with a diamond. About a year later, profits weren't good enough, and they changed the ad to 2 months' pay and conned a bunch of people into buying diamonds. Not that it's a bad symbol, but of course they had a cartel, and diamonds are actually just about worthless. If there was an open market in them, there are diamonds everywhere, and incredibly cheap diamonds to get in South Africa. But they continue making sure that no one can get in on their action. And this is probably, what is it? If heroin was legal, you'd have somebody like the De Beers out there pretty much defending this market every single day. But even one of the CEOs of De Beers once said, diamonds are literally worthless. The only reason they have any value is because of us. It is a cartel. It is a cartel that you can mine diamonds, and you would be surprised how many uses for diamonds there are industrially, where they crush up perfectly good diamonds to use these things to keep the supply down. But one of my pet peeves out here, and that if there was a rational society, diamonds would be worth next to nothing. And of course, there's a big outfit down in Sarasota, Florida, south of Sarasota, that manufactures diamonds, but much less like the margarine and butter wars. In the old days, margarine was not allowed to be yellow because the butter people said it would be confused with butter. But eventually that went away. I suspect this will go away too one day. Not sure when. Manufactured diamonds will be perfect and available widely one day. De Beers will eventually wander off the sunset.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And the S&P's up 2 points. The Dow's up 122. The Nasdaq's up 5. The Russell's up 1.62. And of course, let's go here and take a look at the SMHs, because it seems like everybody I talk to, man, are they bearish on this? And I don't think I think they're weak, but I don't see the risk reward in shorting anything right now ahead of fund buying, unless you're doing like a one-day trade or something, and that's just about it. Do we have a caller on the line? Any chance John from Philadelphia is there? He is. Go ahead, John.
David, hi. Thanks for taking the call, sir.
Okay.
Dave, I wanted to call and ask you if you could give us your read on Caterpillar stock, whether you see a short-term high potentially forming. And coincident with that, if you can speak to us about CAT and its earnings report. David, you have mentioned over the past couple of weeks, you've made an observation about several corporations who you say made moves in 2017 expecting tax reform not to go through as planned, and had to take charges this new year on account of those actions. And wanted to ask if you can share specifically what you mean by those mistaken actions, please.
Okay. A lot of this goes back to the blow up in 2008. The tax the tax law was kind of changed at that point, and they changed it so a lot of these, especially the banks, could do what is called deferred tax assets. And why it was primarily aimed at banks, it worked for everybody, especially anybody that had lots of money out there. Not, for the most part, the tech stocks. who were printing money even during the worst parts of 2010. Microsoft was still making money. A lot of the other ones were making money, but they have, 50, 60, 70% margins. When you're dealing with big companies that have huge capital costs, like Caterpillar, like others, they, when you're only making 6% and you lose 20% for a year, you're looking at the next 3 years and making it back up. If you lose 70% one year but can make 70% back the next year, not such a big deal. So they aim these deferred tax asset plans around 2009, 2010, and everybody jumped on board these things. Well, with all the free money, everybody kept on thinking that there would always be yet another year where they could use these tax deferred assets. And as far as they were concerned, they could leave them on the books at 35% and get rid of that at any time they wanted to. So if they wanted to repatriate a bunch of money, they could use them, and to the extent that they had left over on these things were in 10 and 20 and $30 billion worth of deferred assets. So they could get rid of maybe 35% of the tax that they wanted to, but they didn't use these things. And even when after the election, a lot of people were telling them that they should go ahead and, put those in 2017. And a lot of people, I think rightly, worried about the opportunity to actually get these in and whether they should wait until the market rolls over to start using these. But what it did was a lot of these things were worth about 35% of taxes. So to the extent that they had these left over. But when you change tax from 35% to 21%, that's a 40% cut in what they have and what they can leave on these books. So everybody that came through and didn't use these things now got a 40% cut in what it can leave on the books for taxes for the coming year. Now, not all these folks did it. Some people have mid-year tax splits, fiscal tax years, like yes. Microsoft comes in the summertime. Unfortunately, a lot of these folks had tax splits that come late in the year, like October and November. And still up to that point, they thought it wasn't going to happen. And so they decided not to use them.
And I see what you're saying. Got it. Got it. So that failure to act and bring back overseas cash, take the taxable events, but offset that event with a deferred tax asset. That was the management choice, which in retrospect was a big mistake, you're saying.
It was a bet that this would not pass. And I think even before I went for Christmas break, I said, there's going to be a lot of winners and losers. And most interestingly is if you go into all the stuff that the company provides, one of the things that they provide the least is they're planning for taxes. And I think that's so that they don't get beat up in the media because everybody would make a big deal of it.
Sure.
Although corporations never do pay taxes, it's just money that comes out before it goes to the investors in some method. So I'm not the fan of the evil corporation, although there are some, but the all evil corporations that never pay any tax. They never do pay any tax. It's just whether or not you're paying as an investor, you're letting the government take the tax one level above you and then paying it again when you actually hopefully make a profit on theirs. So, 35% to 21%, that's a 40% cut. That's what came off of Caterpillar's books instantly today. And let's see what they're trading at now. I put it up here somewhere. I want to thank you for the question because I think these things, and then I forget, and a couple weeks went by and Christmas and came back, and as far as I could remember, I probably had said something about how these deferred tax assets actually work. It's all an accounting gig. They may not have even used these in the next 2 years, but what it does mean is that they can't ever use these again.
Right, exactly. So the opportunity to utilize that by taking a taxable event in 2017, such as bringing cash back, incurring the big tax bill, but sheltering it with that deferred tax asset. Failure to do so cost them. I see what you're saying. Okay, thanks so much on that. Back to the question I kicked this off with on Caterpillar stock, which has gone ballistic, just like Deere stock, just like Boeing. Anything that you're looking at that suggests a short-term high and pullback coming shortly, or can't you say is my question?
I don't know, maybe a double top, Kevin, but Tuesday I would not be short or think that these things had topped until we get through probably Tuesday through Thursday next week. We've seen the at least initial white paper on infrastructure spending. And my guess is that why it's kind of quiet now, it's going to be a fever pitch come next week. So if I was looking for this, next week sounds a lot better to look for some signs. I don't see them today, and we don't have a number on how much and how big that infrastructure spending bill will be.
Thanks so much, David.
You bet. We'll come back and talk about more implications about taxes.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we'll be back. Anyway, if you want links to the articles that are around this, I'll be glad to give them to you. But there's a handful of them and some more I read about 10 of them this morning. It did indicate, though, that the people that were going to do the best going forward with a new tax plan that would be able to shed the most were actually the highest taxed companies in the United States, and that is the CBOE and other ones like ICE, any of the exchanges. Apparently, they've got a lot of taxes, and at least the articles I read showed that they would do fairly well. One of the other ones that continues to do well with a deferred tax deal has been Wells Fargo. They actually did use a lot of these this year, and this thing's making another high out here today. So these tax benefits, and in fact, we were talking about Caterpillar to begin with, it kind of dipped down a little bit lower. A lot of people were, when these things come out, it takes a while to kind of wade through exactly what they're doing. And I think, a couple hours went by in Caterpillar and everybody figured out, okay, this is a one-time deal. Things probably not as bad as everybody thinks. Probably should have used some of these deferred tax things up this year. What can you do about it? But you know what? Going forward, 21%. So in retrospect, would have been a little better. But of course, it's not like the future is horrible with the same taxes and not being able to use those deferred taxes. You actually get to use the lower ones. So, yeah. Yep, that's the, in fact, somebody's IMing me, and yeah, that's actually the Citigroup thing is in there somewhat too in those articles that I put in. Anyway, you can always email me at path@tfnn.com. You can call me at 877-927-6648 or put a message in the den. We're going to go to Lars in Minnesota, wants to look at CHRW. And this is C.H. Robinson Worldwide. Let's go ahead and get the profile on these guys so I can actually say exactly what these guys do. Third-party logistics company provides freight transport services and logistics solutions to companies in various industries worldwide. The company operates through North American Surface Transportation, Global Forwarding, and Robinson Fresh segments. Trucking and rail. They kind of put all the stuff together, organize it. It's founded in 1905. Didn't know it was that old. Based in Michigan. Okay. Parsable short on CHRW 100 to 101. Maybe. You got a little doji out here today. To me, could you pull some shorts on some stocks now? Yeah. Are they probably going up? Probably not. But are they going down? I don't see any evidence of that either. So to me, I think we're maybe a week or two away from seeing something. Even if we had a little pullback, I'd probably think that we're going to get kind of a retrace and at least a retest of the top. So I'm not a big fan of it now. I know you got a little bit of movement in the SMHs today. But again, my guess is by Monday, you're going to see those funds with a lot of cash coming back in. And to me, shorting on the 5th or 4th of the month is always preferable than trying to short going into fund buying. And we'll continue to keep an eye on that. Dow up 123. What else do we have out here? Is that it? Why can't I see the rest of that? There we go. And the S&P 2838. Another question out here. Like I said earlier, the SMHs look to me like the one that ran up first. They look kind of tired. Even if you get a little pullback here, I would wait for a double top or some kind of, what would you call it? Not three drives, a double repo pattern where this thing kind of goes out sideways for a week and then fails. You know, just in this case of CHRW, I'm not exactly sure what the bearish case is on this, at least from looking at the chart. You do have a doji out here. It spiked to 98.66. Does it get to 101 and then you pull the trigger? It could. But to me, there's a lot of low-hanging fruit out here, and it's not in trying to pick the top of one of these things that just kind of stumbles higher each day. To me, it would be those stocks that did blow up, come back up to resistance levels and gaps, and do so with very light volume and not push those through those gaps. Those are going to be the people I think are going to be the number one out here selling. Now, of course, after the bell tonight, we've got kind of the Super Bowl of earnings with companies like Intel and others. This has been under a lot of pressure and negative press for the last few weeks, like Apple, also the social media stocks, tech in general, been kind of for what is normally a very placid and sycophantic press and technology is turned decidedly against these folks. You are up against resistance in Intel on this gap down on the 3rd, which was the beginning of some of the gap down into this. Is that right? Yeah, the 3rd of January. Now, all we did was come back and retest this gap up that had 90 million shares on the 27th of October with 45 million shares. Now, granted, this is a retest of the previous December 6th low that only had 27 million shares. But again, this was a lot of that throw the baby out with the bathwater on the idea that literally all your machines were going to burst into flames. I didn't buy it. I still think that 6 months from now, this is going to be as forgotten as the clock issue in 2000. They've got mitigations. In fact, if you have a Chrome browser, you can get the Chrome browser today that will block anybody trying to do that through your browser, even if you've got don't have the patches underneath it. Google actually released that. So you've got kind of a little pullback here. Is this incredibly strong? Right here, the answer is no. Could it come back a couple of bucks? The answer is yes. So would I be long Intel going into earnings? No. But is it going to be a disaster? I don't think so. They still own 98% of the server market. That continues to be strong. And in fact, they continue to sell more and even faster processors, motherboards, and other parts. Some of their new super high availability servers are selling great. In fact, that's what really moved this thing out of that range from the 35 level and moved it higher. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
There's always action going somewhere all the time. 1348.70 on gold, so it's a little off its highs. A lot of reaction out here. Silver off 14 cents. And, of course, market gives, market takes back. But I continue to think gold will be a long-term good hold. And as Andy in the den asked, is this a gift? I think we are going to get a gift here, so we'll keep an eye on it. Let's go ahead and look at some of the other earnings. As I said, Intel after the bell tonight, does it get back to 44, 45, 44.50? A lot of these stocks not moving a great deal. I don't see a lot in it either up or down, but I would suspect that we're probably, if it did go up, you'd have every shorter in the world on it. If it goes down, you're going to have all those same shorters covering fairly quickly. So I don't see a lot of movement in that. Some of the bigger movements out here today have been OLED. This one was down to 167. These are, of course, the guys that make organic LEDs. You had a high volume high. This has not come back and retraced it. You do have a lot of energy off the top, though. So the next move up, you need to really worry. Pretty significant volume down today with 2.2 million shares already. During the day, interday, too, we had a ruling on Philip Morris on whether they had these things that were kind of like vaping things for cigarettes that they were trying to say that were more safe to use than cigarettes. And the idea was that this thing was going to pass, the government passed on it, and this thing spiked down. I'm not exactly sure if this 102 tick is actually real. I was watching it move fairly quickly, so there may be one or two ticks down there. It's hard to tell. It kind of came back a little bit. I was always dubious as the fact whether or not these things, at like a big corporation like this, would get that past government officials, but that would be it. Bigger losers out here is Newell, Rubbermaid, NWL. This thing has been kind of a football for a while on earnings. You've got your second gap down here. Go back here and look. Second big gap. And my guess is you could get one more on this in the next earnings call. So wait for them to throw the baby out with the bathwater on this one. But down $6, which is about 20%. And man, you got a nice gap out here. That's probably going to take a little while. Not a big fan of shorting stocks under $30, but this one has had a history of these big moves during earnings. 3M also very higher, much higher. up $4.50 at 252. No sign of weakness in this one. You would like to see a little bit more juice in this going higher today. Again, just kind of the overall bullishness available. What else did we have out here? UNP. Again, I didn't get a chance to do it, but I want to thank John from Philadelphia in the Den, who basically said this guy was doing an interview and saw some big intraday movement in this when the guy was speaking on CNBC. 133.09 right now, got down to 131.82. I said the last couple of days that all of these railroads, it seemed to be coming off a little after earnings. This one's a little bit bigger than the rest, almost 6%, huge volume of almost 10 million shares already. This takes you back into what support could be about 127 to 125, probably where this thing would find a possibility of being bought. And of course, the biggest thing is going to be whether or not we have a lot more mines open up in the Northwest that could use a lot more train business hauling that oil back out. I caught just the tail end of his interview. He talked about fracking sand business being and coming back, and doesn't seem to have done a lot for the company, but it is there. To what else did we have? Sherwin-Williams, which is talked about a great deal over the airwaves here, SHW, down a little. Again, a lot of these stocks just priced for perfection. Did they disappoint? Not really. Just, they didn't blow out, and that is it. These stocks are a little bit ahead of where they're headed. I'd still like on these that even failed a retest at the top on much lighter volume before pulling the trigger down lower. In biotech land, BIIB is getting back up into these areas. 352.32 does go back out here and make a new high compared to the October 18th high of 2017, 348.84. We got to 358 and didn't really hold that. We're at 352. So, you've got you got to watch out for this one closing back into the trading range. I had actually had a biotech stock and decided to go ahead and sell it. We'll talk about that with Tom O'Brien tomorrow in the 3:30 hour. And one of the reasons I did it was saw that the biotech sector with my sector oscillator was showing pretty extreme readings. And let's take a quick look at IBB. But I was sitting on a fairly massive win on it. You got a kind of a doji out here today, lighter volume up here on this highs. Could you pull back 113, 113 and a half? There's a little gap out here at the bottom of a decent candle. You never really broke the previous high of 114.17. So I can say that, this is incredibly strong. No. Is the energy off this December 6th low exciting? No. But, if this thing came back to 112, 113, did so in light volume, probably he's still going to get one more test of the high with all the buyouts in this. So what else do we have out here? Red paint. Okay, indeed. Okay. What do we have? Okay. Okay, I got to take a look at a couple out here just real quickly. A couple of my positions. Where are they at? Come on. Okay, there we go. Okay. Looking pretty good. Okay. What else we have out here? Want to look at that one and that one. Okay. Good enough. ED's in. Okay. Back to you, already in progress. I just wanted to check all these and see what was moving in the market. We're off 1 point in the S&P cash. Dow's up 83 still. Okay, so that gets us to that. Let's take a look at a few more of these earners. And, of course, I was very interested to see why most of these airlines were headed lower. A variety of combination of things seemed interesting to me. One is a lot of these guys, whether they hedged enough for fuel, there may be some other reasons in here too. But I read the transcripts of a couple. It didn't really sound like these guys were planning on higher fuel costs in the near future. Down on heavy volume JetBlue, look at others when we come back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And everybody's trying to top tick the semis. To me, there are some sectors out here that actually look fairly weak that I think might have a much better opportunity, especially if crude goes higher. That is these airlines. Alaska Air Group did puncture its previous low, did so with a lot of volume. It's going to close into this trading range, but maybe it'll bounce over the next week or so at higher crude prices, would signal the next leg down in this one. AAL is also down a little bit. These things went higher, had some big volume to the downside the last couple of days for American Airlines, even lower out here. These things are back into the trading range, and you got $7-8 in these trading ranges. I still would want this thing to hopefully bounce up to 56, 56.50s, 57 bucks for AAL on light volume, and then set that up as a ABC on the way back down that would probably extend. This is all based on crude prices staying higher. So a few of those airlines they seem to be acting as a group and kind of looking at higher crude prices and energy prices. I posted it earlier in the den, and that is historically the cost of an airline of running it is 80% is fuel. The leases are long on the plane. You've got a bunch of people, but for the most part, it's not a cast of millions to get an airplane in the air. Baggage handlers, pilots, stewardesses. What are they called now? Don't know. Airline attendants. Okay. A handful of other people, but 80% of your ticket price goes to fuel, and the rest is any profit if there's any left over. So always a big factor in that. And to me, you've already seen that kind of weakness come in. Some people are talking about other issues, including expanding capacity that could come later to bite. But all those things made me think maybe this is a better sector than some others to be short in the near future. Crude's off 45 cents today. We'll be back tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.